Whoa, what happened to TradeSmith? Hey everybody, Courtney Smith here, and I'm really excited that we've decided to completely rebrand TradeSmith and go back to what I used to edit many years ago called Wall Street Winners. You see, back in the day, I edited this publication. We had about 23,000 subscribers, and it was ranked by a Mark Hulbert Financial Digest as the #1 performing stock picking newsletter for 5 years in a row. This is an incredible track record that I produced back then. And you know what? I kind of sat there and said, why don't we go back? It was a great name, Wall Street Winners, stocks that make you money. Gotta love it. So we decided to rebrand everything. And from now on, we're Wall Street Winners, or WSW for short. I hope you enjoy it all as much as I know you're going to enjoy this disclaimer. All right. And by the way, we're going to make some improvements here. You're going to love this better. Wall Street Winners more than you loved TradeSmith. I think you're going to really like some of the cool things we have planned coming up that we're going to be rolling out over the next month. Okay, S&P 500. One thing, for example, is our charts are bigger than they used to be. But okay, let's get going here. First of all, I don't know why it keeps going like that. That's pretty crazy. But anyway, so you can see that don't ask me, what do I know? Okay, so what we can see here was the S&P. The purple predictor is still very, very bullish, no question about it. And we're still in a bull market, but if you look at it, we're kind of running out of gas on the upside. Now remember that the seasonality should run out in mid-April, so we still have a ways to go. So it looks like maybe a struggling bull market. Let's take a look at the Dow. Now the Dow here, on the little rally that occurred, that ended a few days ago, we didn't make higher highs on that rally. Over here in the S&P, we made higher highs, and then we sold off a bit this last week, but the Dow never did. If we look in the upper right-hand corner, the red line, which is selling pressure, started to widen a bit on the green line, which is buying pressure. So the Dow type stocks are not where to be. We don't want to be there at all. Well, if we don't want to be in Dow stocks, we'd rather be in S&P stocks, but it's Nasdaq stocks are the ones that are really taking off. Look at that. New all-time highs just 4 days ago. This is a strong bull market. This is where we really want to be putting our time, attention, and most importantly, our money. Seasonality indicator, bullish. I put the red line there at about 148. If we break below that, I'll switch the seasonality back to neutral. But right now, very strong, almost made new all-time highs. Purple predictor is strong, making higher highs, higher lows. Everything about this chart is bullish. Seasonality, once again, middle of April. So we got about a month to go to the upside under normal seasonal expectations. And at that point, then we might start to see the market enter into this kind of long, slow, dribbling lower. It might take months. It will be frustrating. Look, let's be realistic here. Markets aren't always, they don't always go the way we want them to go. What'll happen here is that it'll be a frustrating market. We'll still be profitable because our stock picking is second to none. As I showed you, I had the #1 stock picking newsletter for 5 years in a row. So we know how to pick stocks, okay? We know how to do that. So if the market just dribbles lower, we're going to still make good money. All right, the yield curve still going to keep us from having a great big bull market. It's going to keep us, we can still have a bull market, but you can see all the way through the summer, the yield curve goes down. And this coincides with our seasonality expectations perfectly. Look for the market to rally in the next month and then start a slow dribble into the fall. Now, in the fall, you can see that the yield curve in September popped up last year, and I think that's going to help out our big fourth quarter rally that I'm expecting. Asset allocation moved to new highs, showing that money is now starting to move a little bit out of the bond market and into the stock market. So that's providing fresh new buying. Even though sentiment is pretty bullish, it's good to have new buying come in from other market sectors like cash or bonds. Risk Decatur also popped up a little bit. That's a bit bullish as well, although it'd be great if we could get above those highs we made over the last 2 months. But right now, at least it's moving in the right direction, which is bullish. So once again, kind of supporting our scenario of a rally over the next month. Global shares, who cares? Bonds, just as I told you last week, we are going to get a rally there, and that would cause the stock market to rally. I'm looking for this to continue to move higher this week. Not as strongly higher as I told you it would go last week, but still a grinding higher, which is going to keep the pressure off the stock market. Rising interest rates are bearish. So interestingly enough, money came, we know that money went into the bond market. We know because the price went up. But we also know that money left the bond market and went into the stock market. So what that means is that a lot of cash is coming out and going into the bond market and into the stock market. So this market is being supported by cash, and the stock market is being supported by bonds. Okay, key factors in the bond market. Now, this, once again, was one of the reasons why we told you bonds would rally. The green line shows that's the 10-year yield. But our 3 indicators, gold, German 10-year, and the CRB, have all hooked lower, thus suggesting lower interest rates, higher bond prices, or higher T-note prices, I should say. So look for the Treasury notes to continue to move higher over the coming week, 2 weeks, that kind of a period at least, and that's going to help out the stock market. The dollar, if the bonds are strong, that usually means the dollar is not. And here we have the dollar's holding up. I think we're just in a trading range, so I'm really avoiding it at this point. That also means that gold's probably in a trading range, and in fact, it pretty much is, although there is a slight downward bias. Fully paid up members know that I've been talking about the tips a lot, which is in our fully paid up member section, and that's also a bit bearish still. All right, there's our indicators, though. You can see that the top 2 indicators are kind of like who cares, but the bottom one is still bullish. So the fundamentals are slightly bullish for gold, except for, as I say, the tips indicator, which is in the fully paid up section, which is a bit bearish. So when you balance out all the indicators, kind of a sideways market. No reason to get really strong in either direction. Okay, oil market popped up on Friday. We're seeing some changes in the storage inventories that are bullish. We're seeing higher production. Every week it's higher production, but we're also seeing even higher demand. So that is being supportive of the oil market, and look for it to move higher. Bitcoin, who cares? All right, everybody, all you freebies, love having you here. Hope you like our new changes. We're going to, as I say, we're going to start making some more changes that I think you're going to absolutely love. So hang in there. Tell your friends about Wall Street Winners. Of course, we will send you an email asking you to subscribe. So, all right, all you freebies, love having you. All right, fully paid up members, pretty exciting action in our open positions. So hang in there.